Two things that I think are most important. One is that the rate of increase was quite strong on a national basis. Depending on exactly which data point you look at, over the last 12 months, home prices are up roughly 10% across the country. That's the first thing, the strength of that increase. Because if we looked, say, a month ago or 2 months ago, the number wouldn't be quite that high. The other thing that I think is important to bear in mind is that the reach of increases spans all 20 markets that we survey. Granted, they're not all up by the same amount, and some are above average, some below, but all 20 saw an increase in the last 12 months, which is also important.
So it's widespread. This double-digit gain in terms of the pace, in terms of the rise. What's driving it at the end of the day? Who's buying these houses?
I think three factors that I point to account for the strength in the market, and in no particular order. One of them is the competition from rentals, particularly in markets like New York, but not limited to New York. We see rental rates at very high levels and rental vacancies at low levels. That means there's a lot of competition from the rental market that might impel people to want to move into ownership. So that's the first thing. The second thing is, generally speaking, the strength of the economy. If you look back, say, over the last year, unemployment is down, incomes are up, various measures of economic strength are typically to the positive side. Now, not as strong as they were, say, 10 years ago, but nonetheless better than they've been. And so that fact encourages people to want to buy houses, gives them more confidence, and secondly, it gives them the ability to buy houses as their incomes grow. The third thing to keep in mind, I think, is the availability of financing. I mean, mortgage rates today are at lows, I think, not seen before in my lifetime, or certainly it's been since I was a very small child. Rates are very, very low. So for someone who has a decent credit history, this is a better time to borrow than anything in recent memory. So you put those three things together, the competition from rentals, the strength of the overall economy, and the availability of financing, and that's not a bad recipe for a strong housing market.